Good morning, everyone. Welcome to another RF crypto video. Today is another red day in crypto with the global crypto market cap standing at 1.99 trillion. It's below 2 trillion for the first time in 2 or 3 weeks. And yeah, it's a decrease of almost 3% from yesterday. Bitcoin is down by 0.5%, Ethereum by 2.32%. Everything is down. Everything is down. Except for these stable coins. Stable coins are, they're stable coins. They're going to be stable. But let's just go down and see till when. The first positive price change in the top 50 is number 48, which is IOTA. So in the top 50 coins, only one of them have a positive change. So the markets are quite red today. The markets are trading down. It is a boring day in crypto because 2.71% isn't much. We could see a jump back up of more than this decrease. So today it decreased by 2.71%. Tomorrow it might increase by 5%, 6%, 7%. This market, that's how it works, and we'll just have to keep an eye on the movements going forward. Crypto miner Argo diversifies into non-mining blockchain business. So Bitcoin miner Argo, this Bitcoin miner is actually a public company. They're starting a non-mining business unit called Argo Labs to diversify its business and take advantage of opportunities in the blockchain ecosystem besides mining, which would include the metaverse, NFTs, and gaming projects. Just like how Binance, just like how FTX, just like how Coinbase, they're opening investment arms in order to invest in the seed phase of these type of projects. Argo Labs is going to do the same thing, just so that they're more diversified and not only stuck with mining. So Argo Labs will mainly focus on network participation and strategic diversification through the efficient deployment of the company's crypto treasury assets. The network participation will consist of providing infrastructure support, running nodes and validators, and staking in innovative projects. Meanwhile, the other half of the business will include supporting early-stage projects, DeFi, NFT, and the metaverse ecosystem. And this is part of a strategic diversification because one thing is for sure. So Argo is a publicly listed company, and the price of its stock is directly correlated with Bitcoin because its main business unit is Bitcoin mining. So their revenue is severely tied or mostly tied to the price of Bitcoin. There is a set number of Bitcoin that they can mine per day due to the exahash rate, which is how much computational power they use to mine the Bitcoin. So let's say that they can mine only 10 Bitcoin a month and the price is 60,000. That's $600,000 in revenue. But let's say the price drops like it dropped in the last month or two to 40,000. The revenue suddenly drops monthly from 600,000 to 400,000. That's an incredibly massive decrease in revenue, and that will impact investors' perspectives on how the company will perform going forward because the revenues now are down while fixed costs remain fixed. What happens? There is a massive sell-off of the stock and its stock goes down. So if the price of Bitcoin goes up, Argo stock goes up. If the price of Bitcoin goes down, Argo stocks goes down. In order to not be tied to the price of Bitcoin, they want to diversify. And they say that we still believe in Bitcoin, but there's the other side of the ecosystem that's really promising in building new applications every day. And they want to become a blockchain technology company, noting that the company had previously made investments in other areas other than mining, such as $10 million in crypto venture capital firm Pluto Digital Assets new fund. They want to become future ready. They want to invest in companies which are the future of blockchain right now, DeFi, as I mentioned before, metaverse, NFTs, and gaming. And we will see them adding these type of projects to their portfolio. Argo blockchain will no longer be seen as a mining company, but it will be seen as a blockchain company, and that's what their aim is. Opera releases Web3 browser ahead of cross-chain wallet launch. So Opera, the famous web browser, they launched the beta version of its crypto browser project, an internet browser with built-in Web3 integrations. And the product is targeted at both the crypto native and the crypto curious. So it will be easier to use and it will be intuitive to use for both people who are very familiar with crypto and people who are quite new to crypto. And the main feature of the browser is that users can switch between applications without having to sign in to their wallets for every new tab. And this will work for any application that has an Opera wallet integration. Right now, the Opera wallet is exclusively compatible with Ethereum, but the company plans to roll out Polygon and Solana compatibility in the near future with a big Layer 2 announcement. So they're going to integrate Layer 2 and they're going to roll out Polygon and Solana into their wallets. They might also integrate the Bitcoin Lightning network in order to also process Bitcoin transactions. So there is a browser war going on to see who will become the king of Web3. Opera isn't the only one looking to take advantage of the growing Web3 interest, and namely in competition with Brave, which is a well-known crypto-centric browser that boasts its own payments wallet. And after successfully adding cross-chain compatibility, Opera says it will open source its wallet and it will maintain a focus on privacy and security. They want to basically develop a web experience for the Web3 for everyone, and they don't want to hide behind a facet. They don't want to patent anything. They want everyone, it seems like they want everyone to enjoy it, and it's good advertising, I must say. Coinbase partners with Mastercard for NFT marketplace purchases. So credit card company Mastercard has announced that users of Coinbase's upcoming NFT marketplace will be able to use their cards to directly make purchases as part of a new partnership. At the moment, how do you purchase NFTs? You have to buy Ethereum through a wallet, and then you have to transfer that Ethereum into like OpenSea or whichever NFT marketplace you use, and then you convert that Ethereum and you buy the NFTs with huge gas fees. It is a complicated process, it is a costly process, and a lot of the time new users can lose their coins because of not knowing what to do, not knowing what addresses to use. And Mastercard and Coinbase, with this partnership, what they want to do is they want to simplify and they want to streamline the experience of purchasing NFTs, because instead of having to buy Ethereum and instead of going through that risk, especially if you're a new user, you can just take your Mastercard credit or debit card and then just purchase those NFTs or digital goods using that credit card. It's just like going into an online clothing website and purchasing clothes with your credit card. And since Coinbase first announced its NFT marketplace under the plan named Coinbase NFT in October, more than 1 million people have signed up to be on the waiting list. And according to and this is just in the United States. Once they release globally, this will have a huge following, and they might even compete with OpenSea and other major NFT marketplaces. And according to a recent report from DApp Radar, there may be a higher demand for NFTs in 2022 following the surge from the previous year. The platform reported that NFT trades generated $10.7 billion only in the third quarter of 2021 and almost $12 billion in Q4 2021. Despite the volatile cryptocurrency cycles, what this means is the prices up and down, and now definitely looking at the cryptocurrency market, you can look at here. It's a downwards trend. Despite this, NFTs maintain a stagnant positive trend. And that's why there are a lot of projects in NFTs. There's a lot of projects in the metaverse that integrates NFTs because there is a lot of demand for it. There is a lot of potential for new applications to spur up in this sector, and also for investors to make a massive earning. On other news, fintech startup Milo is offering 30-year crypto mortgages. It's a Miami-based fintech startup which is claiming that is the world's first crypto mortgage. The digital bank will allow crypto investors to leverage their digital assets to purchase real estate in the US. At the moment, only customers wanting to use Bitcoin as collateral qualify for the Milo's 30-year mortgage. It allows users to, instead of selling your crypto for down payment to qualify for a mortgage, you can leverage your crypto to invest in real estate. So you can leverage that crypto as collateral. You don't need to sell it for fiat in order to purchase real estate. And Milo already granted some loans as part of its early access stage and expects the service to be available to most applicants on its waiting list in the coming months. So in 2022, this will be fully online. And it's very important that this came along because the existing ways for crypto consumers to access home credit has left them with unintended tax liabilities of selling. So you need to sell your Bitcoin for fiat for a down payment, or worse, opportunity cost of seeing their crypto increase in value. So if you sell your crypto, you're legally obliged to pay tax on it because you probably made a profit on it because crypto is always going up. Or if you sell your crypto and then you use the fiat to put it as a down payment, you might regret it later because let's say you sell your crypto at $41,510, you sell your Bitcoin at this price, and then tomorrow it goes up to $50,000. The value of your crypto which you sold went up, but you don't own it anymore. The opportunity cost of holding that crypto is already gone. And an interesting thing is that Milo is based in Miami, which has a very pro-crypto mayor in Francis Suarez. He introduced Rupena, who's the CEO and founder of Milo, at the North American Bitcoin Conference on January 17th. He said that Bitcoin mortgage is a groundbreaking achievement for advancing US dominance in the Bitcoin ecosystem. And this is very important because Miami could become the US hub for crypto, given that it has a very pro crypto mayor who accepts who accepts part of his salary in Bitcoin. Milo previously raised $6 million in seed funding from investors, and the owner, Rupenna, previously worked at multinational investment banking companies such as Morgan Stanley and Goldman Sachs. So he is familiar with banking, he is familiar with investments, he is familiar with mortgages, and he can leverage that previous knowledge he gained from these investment banking companies in order to propel his company into becoming the leader in crypto mortgages. So the Mining Council's Q4 survey states that Bitcoin mining has become more sustainable. The percentage of global Bitcoin mining industry running on renewable power increased by a percentage point to 58.5% in the fourth quarter of 2021. So just think about it, right? Crypto mining, especially Bitcoin mining, is seen as a very dirty thing. It's seen as a very energy intensive thing. It's said to be contributing to global warming. But the fact that more than half, almost 2/3 of all Bitcoin mining taking place using renewable energy tells you that it uses more renewable energy in percentage terms than what most countries in the world use to produce their electricity. And if 2/3 of mining is achieved through renewable energy, then how can you call it dirty? So Michael Saylor, the founder and CEO of MicroStrategy and a key member of the BMC, he's very pro crypto and pro Bitcoin. He said that this quarter we saw the trend continue with dramatic improvements to Bitcoin mining energy efficiency and sustainability due to advantage in semiconductor technology, the rapid expansion of North American mining, the China exodus, and worldwide rotation towards sustainable energy and modern mining techniques. So a lot of what's important in the sentence is this, the China exodus. We know that when the miners left China, the exahash rate went down. So the rate of mining or the computational power used in mining went down by half. But in less than a month, it went up back to where it was before the miners left China. So what this means is that the miners went elsewhere. And the fact that Bitcoin has become more green in its mining means that in China, most of the mining took place using coal, oil, or any other dirty forms of energy. But once they left China and relocated to other countries, they switched from that to more green energy such as wind, solar, or hydroelectric. Also, this comes at a time when the environmental impacts of Bitcoin mining have been heavily debated for some time, and US Congress is now preparing to take a thorough look at the energy impact of proof-of-work blockchains such as Bitcoin. Despite this, Bitcoin miners are increasingly looking for sustainable energy sources as the pressure mounts from the public, shareholders, and governments. Investors such as Kevin O'Leary from Shark Tank say that they're looking to purchase stocks of mining companies that use sustainable energy. So it will become a trend where these billionaires, where these people with a lot of influence, where these pro-Bitcoin influential and wealthy individuals are going to be putting more pressure on miners to become more sustainable because that's where the money will flow. And you know, wherever the money flows, that's what develops the most. So 58.5% of all Bitcoin mining is now green. It won't surprise me if this number keeps increasing and in the next 5 years it goes up to between 80 and 90%. And one avenue that could be explored further is nuclear energy, and it could present an opportunity to introduce large amounts of clean carbon-free energy. But with a lot of criticism for nuclear energy, especially after Japan's Fukushima incident, I don't see this happening much with Bitcoin mining. We might see more solar, wind, hydroelectric, geothermal, but I don't see it happening with nuclear. Despite this, 58.5% of all mining taking place using renewable energy is massive. This trend is going to continue increasing, and at one point we'll forget about Bitcoin having an negative environmental effect, and we will see it as a more clean endeavor. And with that, I think a lot of more money will flow in because a lot of people are reluctant to invest in Bitcoin because of the environmental impact it has. And when this gets overcome, I think there will be a lot of adoption going on, and I look forward to that in the next few years. And with that, we come to the end of today's video. I hope you enjoyed the information. I hope you learned something from it. If you did, please leave a like, please hit the subscribe button, please share it with your family and friends. and I'll see you for the next one. Invest wisely and cheers.